If you're looking for money, Upstart has 3 different options for you. If you're looking for just a little bit of money to cover a monthly shortfall, they have Upstart Relief Loans. They also have traditional personal loans. And finally, if you're looking for a substantial amount of money, they have home equity lines of credit. Let me give you the details on each one, but first, don't forget to hit that like button. It's algorithmically helpful. You can borrow as little as $200 and as much as $2,500. The term on these loans will be between 3 and 18 months. The interesting thing about this loan option is that there are no interest rates. The total cost of borrowing is wrapped up in their origination fee, or finance charge. The size of the finance charge will depend on your loan amount, but your APR will not exceed 35.99%. Remember, the APR consists of both the interest rate and any fees. So you can have an APR without an interest rate. If you pay the loan off early, you could get a partial refund of your finance charge. Upstart's personal loans are a little more traditional. You can borrow between $1,000 and $75,000. The terms of these loans will be 3 years or 5 years. The APRs on these loans range from 6.2% and 35.99%. That minimum APR is extremely competitive, but only about 10% of applicants can expect to get a rate that low. Upstart's origination fees can be as high as 12%, which is quite high. It's more likely that your origination fee would be around 8%, which is still kind of elevated. But that origination fee is rolled into the APR, so as long as your APR is low, you should be in good shape. If you're looking for a more substantial amount of money or want to qualify for a lower interest rate, Upstart also offers home equity lines of credit. This loan is secured with the equity in your home, so you will only qualify if you own your home and you have some equity in it. The line amount ranges from $26,000 up to $250,000. This is not a traditional home equity loan, but an open line of credit. That means that you can borrow from it as needed, so you don't have to draw your total approved amount. Pull down just what you need, knowing you can always go back for more when you need it. That can save you from paying any more interest than you absolutely need to. The APR you can qualify for should be lower than it would be in an unsecured personal loan. This is because they are securing the loan with your home, so Upstart has a lower risk of losing their money if you run into trouble repaying the loan. The APR will be between 6.52% and 18%. However, when you are initially approved, you will be charged an origination fee to open the account, which will be between 0% and 4.99% of the approved credit limit. Also, unlike a personal loan, the APR on the draw can change over time. Because it's an open line of credit, the interest rate will float based on the prime rate. The question is whether it's hard to get approved with Upstart. They claim that they have a sophisticated algorithm that makes it easier for people to get approved and to get approved for a lower rate. This is a difficult claim to verify because every lender protects their approval criteria. How can they really compare? They say that they look at over 2,500 variables in their prediction algorithms. They are pulling this information out of your credit files, bank account data, unemployment, education, affordability metrics, and even your present and past history with Upstart. Not only are they trying to predict who might default on their loans, they are also trying to uncover fraud, optimize acquisition targeting, anticipate loan stacking, and even whether a borrower will pay the loan off early. But when you take a loan from Upstart, you're actually borrowing from one of their bank or credit union partners. And those partners have their own criteria for deciding whether to lend to you. I think it would be easier to get a relief loan than a personal loan, and it would be easier to get a personal loan than one of their HELOCs. I think if your credit score is above 620, you have a chance of being approved. But remember, it's really not about that credit score as much as it's about the details in your personal finances. If you have a recent history of on-time payments and your debt-to-income ratio is below 50%, you probably have a decent chance of being approved. While they boast about having 100 lending partners, their top 3 lending partners account for 83% of all of their loans. But those 3 partners do a lot of business with Upstart. Last year, Upstart generated a total of nearly 1.5 million loans. Even though one of the partners is technically the lender, Upstart will still service the loan, so you will deal with them throughout the life of the loan. As a company, Upstart is well established. They were founded in 2012 and are currently a publicly traded company. That means you can review their annual report if you want to know more about how they function. So what's my overall assessment? Upstart is as respectable a company as any in the financial services space. So you shouldn't feel uncomfortable applying for credit from them, but you should be careful not to get sucked in by their marketing claims. They boast about their AI algorithm allowing them to give out lower rates than traditional models. That could be true, but it's an almost impossible thing to verify. And really, it doesn't even matter what is generally true. All you really care about is whether you will get a lower rate. And for that, you need to make sure to check with several different lenders. You simply can't know whether a lender will give you better terms until you apply. At the Yukon project, we've tried to make it easy to check your rate with several lenders at once. If you go to our lending marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 lenders automatically. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of your approved offers so you can be sure you're getting the best deal you can in your situation. But remember, sometimes the best loan is the one that you don't take at all. Always consider strategies that allow you to do what you need to without taking on new debt. While it could make your life a little more challenging in the short term, it can make your life significantly easier over the long term. If you have any questions about Upstart specifically or personal finance more generally, leave a comment below and we'll see what we can do to get it answered. Don't forget to like and subscribe. It really helps us out and we appreciate it. Thanks for watching.